Welcome back to another episode of Singapore's Real Estate Explained, brought to you by the J&A Investments team. And today we have another new launch review.
Faber Residences is at West Coast area, where we say, location letter far away Ulu.
No MRT.
No MRT, and it has a few supply there like Winstergram, Park Viera, and your Twin View condo. So how this area fare? And we have done up a supply and demand analysis in this area. So you're keen to find out more, do scan the QR code right below, and we're happy to send to you.
Yep, and if you're in the market looking for your next investment home, or you just want to speak to someone to know how to structure your portfolio, you can also scan the QR code at the bottom and we'll have someone reach out to you.
Okay, so let's begin. So before we start, I'd like to thank all our clients who supported us. Officially, we hit 200 good reviews, 5-star, finally. And this is something that we're very excited to share. And our subscribers have grown to 70.2k.
Yeah.
So we hope to continue bringing you value in our new launch reviews and investment analysis. Also, we have served more than 700 investment clients, actually close to 800, and we have gotten about 19.56% returns for our clients. In fact, recently, you just did a revamp of our whole investment philosophy to make sure that it is updated to the newest data points, and that's something we want to continue to champion in this market. So if you are keen to find out more, to approach any of our brokers, and more than happy to share with you.
Yep, so let's dive into the quick introduction for the project itself. It's going to be by Guoco and TID, which is a subsidiary of under Hong Leong. So Hong Leong and Guoco, again, the same company.
Yes.
Very big plot of land, about 25,000, close to 26,000 square meters. 399 units, 1.5 plot ratio. So it's gonna be it's not gonna be a regular tall blocks. It's gonna be 5 stories max, and there are gonna be a total of 9 blocks in it.
So recently, Guoco Land have been very aggressive, bidding land. Lentor collection they bought and then they sold almost everything. 97% sold.
Springleaf also.
Springleaf also 90+% sold. So they have actually encashed quite a lot of, I would say, of cash from all these projects, and they are actively bidding. And recently, they also come out at a place at Margaret Drive area, which we did down one for Penreef, and it is something that we noticing. Guoco Land is on the rise to really buy more lands. And so let's see how this will fare for this project.
Yeah, so I think Guoco Land in the past, how they're not a developer that would price their projects crazily and have units being stuck. They are known to say, okay, I want to clear like 90% of my, or 80% to 90% of my inventory.
Yes.
What is the price point I should price it at? So what you generally see is that how they price it is that on the elevation chart, normally the highest floor is something they feel that the market will accept, and then from there they price everything downwards.
This is quite exciting because if they were to be pricing it sensitively, then potentially there could be an opportunity to enter in terms of investment. But at the end of the day, it's back to how they want to price this project. Given a short story, 5-story, it may be something that they may not be able to do the price staging based on floor level. So we need to really plan our strategy for this project properly.
Yeah, so this also means that there are going to be like quite a lot of stacks, quite a lot of different facings, because it's not like a normal tall one like Ori. It's the same stack, and then it's like, you just have to decide which floor, right?
Yes.
Now you have to be a little bit more careful on your unit selection, because you only have 4, 5, or rather say 4 if you don't want to get the patio units, 4 floors per stack. So there are going to be multiple stacks that you have to decide from.
Yes, and if it's a ground floor, if the developer is smarter, they like to do those kind of, like ground floor, it's not like ground floor, like second floor kind of unit, and potentially more selection.
He does a location, is actually at Faber Walk, and it's located in between Clementi as well as Jurong East MRT. You can't walk to any, but the nearest one would to take a bus to Clementi side.
Yeah, interestingly, the rental in this area is quite robust, because as you could all the way down, you have Business Science Park and all the way down to NUS, NTU. Yeah, so there's a part that very interesting. Even though the location is a bit far, we can see people like to rent here, and co-living company love to also rent here to do co-living businesses.
Yep, and because of the area being near the landed side, your plot ratio for most of the developments here are all 1.4. So you won't be expected to have like super nice views depending on your stacks.
Yes. And that's of density, very interesting. Well, Faber Residences, unlike Park Viera, Twin View, Winstergram, and Park Clementi, the latest launches, is one of the launch that has the lowest density. It will take the number of units, okay, look at the land size, take the land size divided by number of units. The density of Park Viera is the highest. You can see, it's very packed, very cluttered, as compared to that of Faber Residences, where you have better landscaping, more spacious, I would say, facilities, as compared to one of the past projects.
So we don't have the site plan, and we don't know exactly how the units will be facing yet, but some of them could be facing the park connector side, and some of them could be facing the landed side.
Yeah, and also there could be some of the units that is a cheaper listing that is facing towards the AYE, the highway facing. So if they plan it accordingly, they will try to make the cheaper units face the AYE, while the more expensive will be facing the river and the landed side.
Yep. Okay, in terms of landed, there were 3 bidders for this, Guaco Land and TID being the highest one, which is about 8.89% higher than the second bidder.
Second place with Oasis 2024 Private Limited. If you know, they belong to this developer called JBE. The last project I did is at Commodore at Canberra area, a small-time developer, and they also went and joined this bid.
Okay, so for the break-even prices, it was about 1,682. If you factor in actual break-even for area harmonization, you get about 1,008. So 10, 15, 20% profit margin. I think we would expect prices to be about the 2,150 to 2,002 range, something that, Springleaf has been averagely transacting at. So for location-wise, as mentioned, it's between Jurong East and Clementi. If you don't drive, you have to take a bus, which is 154 or 201, and it takes about 4 stops to Clementi MRT.
Yes.
So at Clementi MRT is also where you have Clementi Mall, and something that people look out for in this development is also the 1 kilometer to Nan Hua Primary School.
Yes. And next, let's take a look at the price matrix. We actually churn out based on the size that's given to us, 646 square feet for 2-bed 2-bath. Nowadays, thank God they don't come with 2-bed 1-bath, not as popular in OCR. The 3-bedder, 797 square feet, 818 square feet for the compact, to 861 square feet for the flexi, potentially with a storeroom.
Yep.
3-bedroom plus is 1033 to 1076.
Usually have a flexi plus the home shelter.
Yes. And for 4-bedder, about 1,002. 5-bedder, 1,485. With the price matrix for 2-bedder, about 1.3, 1.4 million. 3-bedder, about 1.7 million range, which is quite normal for OCR nowadays. And 1.85 million, 1.9 million for that of the flexi. 3-bedroom plus premium is about 2.2 million range. 4-bedder, about 2.6 million range. And 5-bedder is about 3.2 million range.
Yep. Okay, so looking at the OCR new launches in this area, the closest comparison you have is actually Alta that launched early this year, and I think they did pretty not bad, because I think Clementi in general, it's a location that people are familiar with, right? So even though Alta is not near the MRT, because of how familiar people are with the location, you'll see that an OCR project has actually hit 2.8. Previously, when we say Jayden hit 2.6, it was something that people say is crazy that the market is accepting. But now you are seeing 2008 in OCR Alta. So 2-bedder, you'll see average is about 1.7 plus, 3-bedder about 2.5, and 4-bedders at about a 3.1 million price range.
Yeah, so you can see this area has quite a lot of demand, but potentially from all the HDB upgraders, from $1 million HDB nearby, and even landed enclave. People love Clementi, would just want to go back to Clementi and pay a premium for a place that is near to good school, central, I would say quite central in the west side, and all the way down AYE is actually very convenient to go to the CBD.
Yeah. So I think when we look at Faber Residences today versus Alta, it's quite a similar situation back then when Whistler Grand and Clement Canopy launched, because Clement Canopy, it's near where Alta is, and Whistler Grand is near where Faber Residence is. So if you look at the gap in the past in 2018, you will see that Whistler Grand actually launched about 1,357 and Clement Canopy launched about 1,466. Naturally, because Clementi area is like termed as a better area.
Yes.
The per square feet gap was about 109. And interestingly, when you move on to today, 2025, you'll notice that actually the gap kind of closed up. So Whistler Grand is at 1905 and Clement Canopy is at 1956, meaning the per square feet gap is about 51. So if you were to then compare it today, we would see that Alta, it's about 2,548 for their average. And if Faber Residence were to actually launch or sell their units average at 2,150, this means that the per square feet gap is close to 400.
So this is actually quite decent as compared to that of your previous Whistler Grand versus your Clement Canopy, given the fact that the location is very pretty similar in these two situations.
Yeah.
So in terms of Faber Residences, so Alta, you can see Alta, as I mentioned just now, about 2005 on area 26 even for 3-bedder. So if you purely look at a quantum play perspective, for 2-bed 2-bath to 2-bedder at Alta, I would say it's about 400k. 3-bedder ranging about close to 700k. 4-bedroom is about close to 400-500k. So I say this is quite a healthy
good price
gap support as compared to that of Clement Canopy with Instagram, which back then was only about on range about 200 to 150k difference.
Yes, because you would know that these owners at Alta, those entering, let's say, a 2-bedder at 1.7, they would want to exit at least 1.9, or 3-bedder at 2.5, they want to exit, let's say, 2.7, 2.8. So if you can get a unit, let's say, at 1.9 for a 3-bedroom flexi, you got a good buffer or price support from Alta.
Yes, indeed. And next, let's compare to the resale comparison. In terms of resale, there are 4 different resale that's nearby. Waterfront and Faber, which is just right opposite, the closest, I would say, apple-to-apple comparison. Okay, but the number of units is about 210, slightly less. Twin View, Windsor Grand Park Riviera is right opposite AYE, the high rise, okay, at 2022, TOP 2023 and 2020, with Park Riviera being the oldest.
Yeah, I remember last time when they first launched, people thought it was ulu, but there were still people that bought into it because there was this transformation that was going on back then that didn't happen in the end.
Yeah, so it was actually a HSR, the high-speed rail, which was supposed to be done, and then it coiled off, and then after that it came back again. So it's really like limbo. So nowadays we learn, don't buy into transformation story. Be more objective when it comes to investment.
I mean, if the transformation happened, it's always a bonus, but always make sure that entry price it's right first, and then if there's transformation, it's always a bonus. Rather than say because of transformation, I'm gonna pay like a premium for the pricing, and if it doesn't happen, then you're just stuck in it.
Indeed. And in terms of age gap, the oldest over here we have Waterfront and Faber, 11 years, followed by Park Riviera, about 9 years, Twinview, 7 years, and Resale, the newest, is about 6 years gap. So in terms of PSF wise, it ranges from about 1,005, which is the cheapest at Waterfront and Faber, all the way to even close to 1,009 for that of Instagram.
Yeah. So if you look at the resale properties, we look at the two bedders, lowest, average, and highest. They may not be the same layout, but it's just the average pricing because it could be the 2-bed, 1-bath all the way to, let's say, a 2-bed plus study.
Yes.
But in short, Waterfront at Faber, average you'll see about 1.1 million. Twinview is about 1.3 million for the 2-bedder. Mr. Grand about 1.227 and Park Riviera about 1.08.
Yeah, so it's important to compare the exact layout to the exact layout, which we'll do once the floor plan is out, then we can do a more detailed analysis. So in terms of 2-bedder floor plans, the similar floor plan in Waterfront Faber, Twinview, and Park Riviera is a 2-bed, 2-bath, where in Waterfront Faber, you only have 2-bed, 2-bath for dual key or 2-bed, 1-bath. So 2-bed, 2-bath dual key is going at about 1.169 million, 1,005 per square feet. Okay, Twinview is about 1.258 million for the 2-bed, 2-bath, and Park Riviera is about 1.05 million. Okay, and Faber Residence at 1.38 million, I would say it stands just slightly above that of Twinview. Okay, and meanwhile for Instagram, there's no 2-bed, 2-bath. There's only either 2-bed, 1-bath or 2-bed, 1+ study, which in this case are 1.42, which is very close to that of the Faber Residence prices.
Yeah.
But for a more accurate comparison, we need to wait for Faber Residence layout to be out and compare apple to apple. That is when we can have a proper analysis to see what exactly is intrusive for Faber Residences.
Yep. Okay, so for their 3-bedders, you'll see that average for Waterfront, it's about 1.6 plus. Twinview, it's about 1.9. Whistler Grand is about 2 million. And Park Riviera is about 1.569.
Okay, so Faber Residences, if you talk about 3-bed compact, it's about 1.75 million. With the Flexi, it's about 1.86. And Faber Residence for Premium, about 2.2 million, in fact. Okay, compared to that of Waterfront at Faber, okay, apple comparison, the 3-bed, 3-bath, in this case at 1.668 will be comparing that of either the Flexi or the Premium layout. Okay, it's about close to a 300k gap. Okay, meanwhile for Twinview, the 904 along with Windsor Grand and Park Riviera, the compact layout, it ranges from 1.45 million to 1.87 million. Okay, and it will be very close to that of the Flexi prices over here, even more expensive than Faber Residence compact layout.
Yeah. And I think for a Twinview ones, their kitchen also don't have a window. But likely for Faber Residence, their 8611 with the Flexi room, they usually how Guaco actually do the layout, they normally have a window.
Yes, and one thing to think very interesting, which when our investment was doing this, there was a thing that highlighted for Park Riviera. The gap is almost 300k to 400k, and we were wondering why. And then when we were on the ground analyzing the units, and then even going there and understanding how this area works, we found out one thing is that for Park Riviera, it actually faces closer to the AYE facing. So most of this unit transacted at this kind of prices are usually AYE facing, while the inner facing can be 250k higher, which is understandable in this area because Clementi area, there are a lot of $1 million HDB, landed enclave. When downsize or they want to upgrade, a lot of them, they do have the budget to buy something. So a family stay, they would rather pay that additional 250k for something that's inward facing where you have Windsor Grand and Twinview further away from AYE as compared to one is AYE facing, since you are able to afford the 3-bedder in this area.
I think developer also play a part because Whistler Grand was done by CDL, and if you do really visit these two developments, their facades are quite different. The way you walk into Whistler Grand, the feeling that you get, because they have quite a lot of facilities as compared to Park Riviera, it's a little bit more squeezy.
Yes.
And it's a multi-story car park as compared to underground at Whistler Grand.
Absolutely correct.
So I think this kind of small things within a development also do affect the prices. That's why you can see, even though Whistler Grand and Park Riviera, the age difference is not very big and they are side by side, the difference in their pricing can be quite significant.
Yes, it also depends on location. So if Clementi area, you can see people do have the capacity to buy something of better quality, they will be willing to pay for this differential in terms of the premium. Okay. So if this move on to the 4-bedder, average price of Waterfront Faber is about 1.77 million, only one transaction in the past 1 year. Twin View about 2.6, Windsor Grand about 2.3, and Park Villa about 2 million. So you see once again the premium is there, especially when it comes to a bigger bedroom size, the 3 to 4-bedder.
So at 2150 average, Faber Residence 4-bedder is going to be roughly about 2.4 for the smaller one, compact, and about 2.6 to 2.7 for their 1206 and 1270 unit.
And in terms of Waterfront Faber, which is, I would say, Levan is also 5-story high, the 4-bed is about 1.77 million, the gap is about 700k. Okay, next we talk about Twin View. You can see the 4-bed 3-bath is about 2.38 million. Okay, we have, I would say, the compact layout over here. Okay, and Windsor Grand similarly about 2.48. And last one is Park Villa, which is, they bought it cheap back in 1.84 for compact layout, and today they're selling at 2.08 million. So you can see the closest that you have in terms of prices are mainly Twin View and Windsor Grand as compared to Waterfront and also Park Villa.
Yeah. And now what we want to take a look is then for these resale developments, how did they perform? Are they profitable? What is the highest profitability, as well as what is their profit upon TOP? And last but not least, we want to go and take a look at when they first launched, what was their pricing as compared to the market average.
So Waterfront and Faber, you can see the highest profit that you see in this area. For the 4-bedder, it's about 485k. They hold from 2016 to 2023, which is about 7 years. Okay, in terms of TOP, okay, they didn't make as much. Okay, we should understand the reason why later on in a while. Okay, about 213k for a 3-bedder premium, and for the compact 4-bedder it's 161k. So the reason why they don't make as much is because when the time they launched, 2014, the average PSL they were transacting was 1230 per square feet. Because the Clementi area, it was hype. It was I would say one of the launches that come out in the area back then. As compared to OCR average of about 1147 per square feet. So it was higher by almost close to 100 per square feet. And meanwhile, for the quantum, means the quantum of the 3-bedder, for Waterfront Faber, it's about 1.3 million. It's slightly higher than the OCR new launch average 3-bedder, which is about 1.247.
Yeah, so I think if you're in an area that, you're next to the MRT, you're in a mature estate, people are generally okay to pay a little bit more. It's like how Parktown, it's an integrated development and people are okay to pay above average. But for this one, back then, Waterfront at Faber wasn't the most convenient location, but yet they still paid higher than the market average.
Yeah. So a lot of people may say, okay, well, Waterfront and Faber didn't do well, means the other project won't do well, but you must understand, it must be pegged back to what happened during that market and what are the prices in the same period of time.
Yeah. Okay, so the next one look at is Twin View. So you can see Twin View highest profitability is about 800 plus K, some at 600, some at 500K for their 3-bedders.
Yes.
And if you have to look at their TOP year profitability, 3-bed 2-bath did about 175, and their 3-bed 3-bath did a lot better, about 200 plus to 300 plus K. So looking at the 3-bed 2-bath, why it didn't do as well as the 3-bed 3-bath is because when you compare it with the OCR, again, similar to the previous example, they paid slightly higher when average was about 1360, Twin View 3-bed 2-bath was about 1004. And in terms of quantum, when the average was about 1.235, Twin View was about 1.29. Then moving forward, why 3-bed 3-bath did slightly better? Because if you have to compare, their entry per square feet was similar to that of OCR. And in terms of quantum-wise, they were actually slightly under the OCR market for their 3-bed 3-bath layout.
Yes, and in terms of 3-bed 3-bath, the demand in this area, because it's more family stay, will be higher, because a lot of people are looking at least a flexi room at this area, and they are willing to pay that premium, especially for those HDB upgraders from Clementi who will make a lot from the $1 million HDB. This is a perfect place they want to stay in, even though it's not in the MRT, but the budget can afford this. Because once you go to Park Clementi's, the jump is actually even greater.
Yeah, so you realize that for these areas in the OCR, 3-bed 3-bath tend to do better than 3-bed 2-bath last time, because for a 3-bedder to get a utility room, it's always pegged to like the extra WC.
Yes.
But then the developer kind of realized that, people, why they buy the bigger 3-bedroom premium, it's really just for the storeroom because they upgraded to HDB and not because of the WC. So that's when they came up with this in-between flexi that you see now, where they have the flexi or storeroom but without the WC.
Yes.
And it's become a very popular layout.
Okay, next we have Windsor Grand. You can see the highest returns is close to 831k. Okay, on average, even the 3-bedder 1068 also made about 764k, one of the best performer in the market back then. So interesting, location really out of the way, and it is somewhere that is not the most popular, not near MRT.
Actually, all these are all out of the way, because all these are all not near the MRT also.
Yes, but these guys who make 700k, which is crazy. And if you look at TOP profitability, they actually outperform that of even Twin View, and you can can see your previous Faber, waterfront Faber. Okay, for 3B2 making about 300k to 422k upon TOP, and 3B3 making similar 300k to 462k. Okay, so the reason why this happened is because back then, okay, Windsor Grand, when they launched in 2018, it was during the Trump tariff period. It was market was a bit more uncertain. The developer also didn't know how the market react back then. So when they launched it at about 1326 per square feet, cheaper than the OCR average of 1360 per square feet. Okay, meanwhile for the 3-beta, okay, it was slightly higher, about 30k higher, but I would say it's still very close to that of the OCR average. Okay, and as compared to the 3-bed 3-bath, okay, similarly, you can see Windsor Grand about 1317 compared to 1334 per square feet for OCR new launch average. Then for Windsor Grand, in fact, the 3-bed premium was selling about 40k cheaper than the OCR new launch 3-bed 3-bath average. So that's why when it comes to profitability, when you buy below the whole market value and market was uncertain back then, developer even gave discount during that period of time. That was when the people who bought back then who was willing to take this leap of faith to buy this project and understand what is the market average back then, were able to profit much more as compared to Twinview, even your waterfront at Faber.
Yep, and the next example we just want to look at is also Park Riviera, which also did not too badly. Highest profitability is about 800 plus K. But if you were to look at the TOP year profitability, that 3-bed 3-bath only made about 100-ish thousand as compared to like Whistler Grand or like Twinview.
Yeah, so it's very interesting because we were saying, why? The PSF, they seems to be okay. We should look at it.
Decent.
Back then, they launched at 1159 per square feet. Okay, the OCR average was 1260 per square feet. The 3-beta was selling about 80k cheaper than the 3-beta around the OCR average. And you look back at the 3-bed 3-bath, okay, the PSF also similar, 1164 per square feet for your Park Riviera as compared to 1238 per square feet for OCR. Okay, and wow, the 3-beta 3-bath, they are almost selling about 170k cheaper than average. So why did not make money? Okay, as much as compared to Windsor Grand? And we found out actually, as mentioned just now, there's actually two main reasons. One is we cannot just look at PSF sometimes. Okay, you must understand this development. How is it being developed? Because in this Park Riviera, if you know about a developer, they actually did not do a very good job in terms of the finishing, a lot of defects, a lot of complaints. It went on online that it was not a good reputable developer with a lot of defects. So this sometimes will actually affect your exit strategy. Okay, and second thing is actually one of the closest development that's facing the highway. So when there's a highway facing you, there's some not so good attributes to development. You have to discount it off from development and factor that into the PSF. So by doing that, something is selling cheaper does not mean it's always the best deal. You must really take note of these localized factors to make a more holistic approach.
I think it also doesn't mean that, if you're facing the highway, you don't profit, because there are many developments where the units actually face the highway and they still profit very healthily. It's always comparing who are your competitors that you are going to be competing against when you TOP, as well as what's the premium or what's the discount that you're getting if you are facing the highway.
Yes, so in this case, you can see for Clementi area, not other areas, Clementi area, the discount can be noticed close to 250k to 300k for this area itself. So when you can see this kind of premium being set in, potentially it may not be as cheap as what you think, that it could be a value trap. So you need to factor all these things in to see what exactly is premium, and it varies from different location. So there's something that you need to analyze to have a more proper analysis of this project.
Yep, and I think with that, we've come to the end of part 1 of this video. Once the prices are out or the layout is out, we have a part 2 where we dive a little bit more in depth. So if this is a project that you're looking out for and you want more information, and you can also scan the QR code at the bottom. And when we go through the unit analysis or the stack analysis, we can share that with you.
And as usual, I know people looking out for our wow approach, but I will stay tuned to part 2 where we will be running through with you the detailed analysis of the layout comparison. And from there, we are able to determine whether we should buy, wait, or avoid.
Yep, so with that, stay tuned for part 2. We'll see you next time. This is Grace.
This is Christian.
Bye-bye.
Bye-bye.